Welcome back. You're tuned into Bazaar Morning Call. Well, let's get in our guest this morning. We have Dipan Mehta, Director at Elixir Equities, as well as Rajeev Agrawal, Managing Partner and Fund Manager at Doordarshi India Fund. Good morning, gentlemen, and thanks a lot for joining in. Well, Dipan, you go first. I wanted to get this out of the way because there are a lot of metal companies that have delivered their numbers. And global cues as well are a little bit muddled, because you have a stronger dollar index. You're hoping that China comes out with some stimulus. But we had Tata Steel as well as JSPL's numbers that were fairly good, while Hindalco's, Novelis's numbers were disappointing. Your quick take on that.
Nigel, good morning and thank you for having me on your show. I think there's a lot of uncertainty around metals, and now that we have Trump in the White House, it's going to cause even more uncertainty in the global markets, especially commodities. So I would just stay away from all metal stocks at this point of time. There's a lot of volatility in their earnings as well. And it's not that valuations are so attractive that you could that they're discounting for any such volatility in earnings. Historically, they are trading significantly higher than historical valuation multiples. So from my point of view, all metal stocks and commodities are an avoid.
Okay, all right. So be a little careful on metals and commodities. That's the call coming in from Dipan. Hi, gentlemen. Good morning. Rajeev, great to have you on the show as well. So what do you think of this whole Trump trade that's going on? And I think what we're trying to understand here for us in India is that what does this do beyond the headlines? Any meaningful impact in terms of flows, you think?
In the preview of Trump trade, luckily in his first administration, and I think one thing we can be all sure of is there will be a lot more volatility that one should expect once he is in office. In terms of the trade flows or the flow of money, I think India clearly is one of the stronger economies. And one challenge that the Indian stock market has had in the last few weeks, months, is the money moving back to China or taking out from India and moving to China. And possibly there could be some reversal there as Trump is known to be very strong on the tariff. So it remains to be seen if that actually reverses for India, and that is a benefit for the Indian markets.
Dipan, what is the one, we're all market animals, and you don't do anything, but if you wanted to take a thought trade or a real trade, I don't know, based on Trump sweeping America, what would it be? I mean, like a real or a thought one, doesn't matter, but what would it be?
I think I'd go with software companies, mid-cap software companies, definitely. And our preference list, it's the outperforming ones like Persistent Systems, KPIT to an extent, Coforge. And now, again, with usual disclosure that we and our clients invest in these stocks, I thought Mastech's numbers were very good. And this time, Mastech growth has come largely from the US market as well. So, I mean, I would add to one of our outperforming stocks. But that one trade has to be, I think, my opinion, software companies.
Rajeev, same question to you.
Yeah, so I think for us, we will focus much more on the Indian domestic plays. And one area where I think there is a lot of value still is in banking and finance, especially because they have not done well. I know I've been on your show multiple times talking about banking and finance. The other one that I will point out would be capital markets. So I think those two plays, which are much more domestic to India, are very strong in our mind.
What about oil, gentlemen, Dipan? I thought more directly correlated to what his policy pronouncements have been. Drill more, get more oil out of the ground from the US, generally should put a lid on oil prices. Are there any sort of direct plays here? Some have been talking about, these refining stocks, which are down 50-60% from their highs, oil marketing companies. Any thoughts at all?
No, Prashant, I think oil as a fear factor is gradually reducing in our markets, has been so for the past several quarters or so. And lower oil prices, of course, beneficial for the economy as a whole, help better inflation management, may lead to lower interest rates sometime in the future. But look, we've seen high oil prices, low oil prices for the last several decades. But look at the returns which the oil marketing companies have given. So I would just generally avoid it. When it comes to Reliance, I think whatever gains we have seen in the last 3-4 years, they have come more from the non-oil, the non-C2C businesses. So just because we have a change of guard in the US, I don't think that creates any inflection point or trigger for buying oil stocks. But yeah, lower oil prices will certainly benefit another favorite company of ours, usual disclosure, that is Indigo. And that's something, which one can consider if you feel that oil prices are going to be lower over the next few years.
Okay, Indigo, that would be a pick. Interesting. Rajeev, I remember our last conversation. Like you said, BFSI is something that you've liked a lot in the past. And I remember we spoke about Manappuram, some of these gold financiers. I think you were studying them at that point in time. I don't know if you went ahead and bought the stock after that or not, because from a regulatory standpoint, it's been a slam dunk, right, with what happened with Asirvad. So I don't know, what's your view now on gold financiers, and if you can tell us about Manappuram in light of the Asirvad issues?
Sure. Yeah, so I think Manappuram obviously has been hit hard after they had a restriction on disbursing loans for Ashirwad. And I think that is an issue that will definitely be impacting the stock in the short run. I think they recently came out with the Q2 results. That was pretty reasonable. But I think some of the pain might still be further ahead, because as the book runs down, and if they're not able to disburse the loans over the next few months, then they will start seeing a bigger pain there. So what are we doing? I think we own the stock. So that's the usual disclaimers. We are biased. And what we are doing is basically, if we find good valuation, we would be possibly buyers, because what we are thinking of is thinking from a long-term perspective. So I think in the next few quarters, possibly it will be a pain trade, but it can then reverse and be a good trade after that.
All right, Rajeev, I wanted your view on this. Overnight you had green energy stocks that took a hard hit. Trump is saying drill, baby, drill. So, you had the solar-related names that sold off big time. In India, we have a few listed companies. The hope was that, modules as well as cells could be exported. What's your view on this theme?
I think I do feel that Trump obviously is not a big proponent of renewable energy, but renewable energy still has become so competitive from a price perspective that more and more companies are interested in having renewable energy. So I think from a solar module perspective, clearly we had a company recently come out with an IPO, very successful IPO. So I think there is a possibility that they are able to export more of their solar panels in case there are bigger tariffs on China. At least that is what they're positioning themselves for, and that is a possibility. We are not that big on solar, just for to clarify to your audience. We are much more on the wind side right now, because we think in the solar there are a lot of players out there.
Okay, all right. Rajeev, great chat as always. Thank you very much for joining us. Dipan, talk to us a little bit about, Rajeev earlier was talking about financials, etc. Anything in that space is looking attractive to you. And let me point you to the space or the segment which is beaten down the most, MFI. And let me point you to the one stock which is also beaten down quite a bit within that space, Credit Access. 50% off the lows, off the highs. Valuations have come off significantly. Arguably, it's the highest quality management in that space. I don't know if you've given it a look, or do you already own it in the portfolio?
Yes.
Go on.
Yeah, Prashant, we own it in the portfolio and haven't sold. What I've come to realize is that when it comes to MFIs and credit card companies, you need to have a really strong stomach and very strong appetite for risk to buy into these companies. Even our conviction is being tested at this point of time, whether the sector really has a kind of a long-term potential. Let's see, for the time being, we are not throwing in the towel. We are just remaining invested. And hopefully this is a temporary aberration. And once these issues are over and done with, and provisioning does come down and they go back to expanding their loan book, we will see earnings coming back very strong. The only reason why we have this belief is that in the past, companies like Spandana, Spurti, and other MFI companies have always come back stronger and created new highs, not only in terms of stock price, but also in terms of profitability. The intrinsic return on equity on a long-term basis is extremely attractive. So let's just wait and watch. I think there's going to be volatility. It's part and parcel of investing in equities, a little bit more in this segment, but there's no denying the fact that it's a high growth segment within the entire banking sector. So I would remain invested.